gap. On the Dow Jones Industrial Average today, we closed up just shy of 200 points. This is now, I believe, the fifth consecutive day whereby we have been left with, or at least in the closing daily price action, that of a white real-bodied candlestick. Yes, we have seen originally, at least on Friday and Monday this week, original gaps down, right, to begin the session. However, we have seen, right, the closing price above that of the opening price, which is giving, of course, the candlestick body that white color. What this is continuing to tell us, right, is that the buyers are still rather resilient. Not only have we come on back down to, say, 25,330, which has been, historically speaking, over the past number of months, a resistance area and also turned support on two other occasions now for the third time, it is also acting as a confluence when we bring up that of the simple moving averages. So we've picked up on this a number of weeks ago, whereby we've seen both of these longer term simple moving averages, right, slowly rising. More or less, they are still moving that of a horizontal, right? I mean, left to right anyway. In the directional movement, it's not really confirming that of the big macro upper trend, but we are still printing a series of higher lows and also higher highs. But you can see most recently anyway, when we actually peaked out back in the month of April, we've sold on back on into where X marks the spot. In fact, we've just got the X marks the spot on the 100 and the 200 simple moving averages, and as such, mixed with that support area, again taking us back to these multiple touches, we're starting to see once again the resilience of buyers show back up. Now, we haven't actually seen all that much of a material move at the moment. 200 points or just shy of that may actually seem like a big percentage move. It really isn't. It was actually closer to, say, 0.8%, which is still a pretty decent daily net average sort of movement. However, you are going to see at some point in time in the near future either price essentially move ballistic or parabolic to the upside, right, where you see the markets up over 1% or over 2%, or we're going to see that of a material break of this swing low over here. It's a little bit early to say. However, if you look at the oscillating indicators, and again, when you are in a sideways moving market, which we are more or less on the industrial average, the S&P and also the Nasdaq at the moment, which is really explained through the use of the exponential moving averages, you can see that we are starting to register that of buy signals. Now, we still don't have it, so to speak, on the net momentum of the MACD. You can see the signal line. It still hasn't actually crossed up above the slow line, nor have we pushed into net positive territory yet with the histogram. But you can see certainly the RSI is adjusting and also the stochastics, which has definitively turned bullish at the moment, or at least it is registering out of a buy signal off from this support area. Now, again, just to show you this on the exponential moving averages, when I say we're going sideways, you can see that the actual, although what was once that of a really nice sloping, right, exponential moving average across the 10, the 20, and the 50, they have more or less begun to move sideways. And if you look back where we're getting the cross at the moment, again, this is not a sell signal in and of itself, but if you go back and just have a look at the general vicinity of these three exponential moving averages, you can actually see that pretty much at the beginning of March, that is exactly where they were more or less anyway. So again, if you just take the average of that and draw a line, you can see whereby the exponentials more or less are moving sideways. And that's why we want to, of course, pay attention to those oscillating indicators. The same is true for the S&P 500, although the big difference at the moment is that although we are starting to see the bounce off from, again, 2,800, it isn't showing up right where those simple moving averages are. In fact, although we are still getting that X marks the spot, right, the 100 is about to cross above the 200, which is a net long signal, right, it is occurring actually above where these simple moving averages are, which again is a sign of strength because we haven't been able to actually sell off all the way into these simple moving averages in the first place. So again, a signal of strength there. We are starting to see the up sort of backwards and forwards price action above and below the sideways moving exponential moving averages. That's why, again, you want to pay attention to these oscillating indicators. Very similar to the data set that I just went through with you in the Dow Jones Industrial Average. The candlesticks at the moment, they're not really giving us all that much information. If I zoom on into the daily price action, you can see a couple of engulfing candlesticks, or at least one white soldier after the sell-off going back to Monday's candlestick. That is now on the 13th of May, so really over a week ago now, anyway, at least 7 trading sessions. And since then, again, we had follow through to the peak of Thursday last week. Then we have, of course, that sort of pseudo gravestone doji, a little bit of a gap down and a spinning top on Monday. But again, the stabilization leading into Tuesday, where we did close up just over 24 points on the S&P 500. So again, I'm pointing out the fact that this does look like that of a pennant. And technically speaking, pennants are continuation patterns. And if you wanted to take, all right, to keep this analysis as neutral as possible, the pennant pattern in this particular instance would actually lead us to the downside, right? Because we were in a little bit of a sell-off. Now we're sort of gravitating into the apex of the pennant. And generally that will lead to a continuation in the original movement, right? Which started off the pattern of the pennant. However, we spoke about this over the weekend in Pro, and we said to ourselves, well, if we get on back down to 2,800 and we do start to set up again white candlesticks around this pivot down here, we went through it a bunch of times on individual stocks, well, then it would also sort of translate into a buying opportunity. Now, as at the sort of the close on Tuesday, we don't obviously have that. And again, it's still a 50-50 sort of split as to whether or not we're going to see that definitive move above 2,894 or whether or not we are going to get the sell-off back down to 2,800. Either way, two simple rules. Number one, we are not selling short when it comes to the actual market indices or any individual trades. Okay, so we're not trading, technically speaking, counter trend. We are trading in the macro and also the intermediate movement of the market, which is the trend direction being that of a bullish market still. And rule number two is we're trying our best anyway to buy off support or to add to original existing positions to take advantage of the larger trend continuation higher. All right, and also, of course, never forget this, that a trend is assumed to be in effect until it gives us definitive signals that it has reversed. So again, as bearish as what you can sort of, paint this picture. And I understand there are a few ways in which you could say that, well, there's something to be concerned about. Yes, I get that, right? As long as we hold up above the primary macro bullish trend lines that have gone through, right, in the sort of public YouTube video sort of updates, the trend itself is still, right, in effect. Okay, so even if we do see a material break below the swing low of Monday last week, it's not going to change our macro bullish opinion on the market. It would just be that of a correction, all right, and pushing those oscillators back further into oversold territory, which will also overlap too with the simple moving averages, again on the NASDAQ and the S&P 500, which are coming in a little bit lower as to where the Dow Jones Industrial Average simple moving averages are, because relatively speaking, that is where the simples would be on the industrial average versus where they are on the NASDAQ down here closer to 7,500. So again, we got the original gap down. This is Friday's candlestick just here. Again, it's a bit of a pseudo sort of shooting star mixed with that of a gravestone doji. We got the gap down on Monday with the spinning top, and what we did was establish out of a gap between these two candlesticks. Now, what we've done today, being Tuesday, is that although we did close up 83 points, we have also closed this open window. So now this is defunct, and we're pretty much right back where we began the week almost. I mean, we are still net negative, down 30 points on the weekly chart, but we do have that of a white candlestick, interestingly enough. And again, that is, in essence, really the resilience of buyers, not only on the daily time frame, but also on the weekly time frame, whereby we're continuing to gap down and buyers are still looking at this as an opportunity to position themselves for the continuation higher. And you can see also very nicely on the weekly time frame, you've got the low, you've got the higher low, and then of course the third higher low as well. And you've got in here the first higher high and now the second higher high. This is back at the end of Q4, leading into really the last trading week of 2018 into the first calendar trading week of 2019 as well. So, I mean, again, be patient with the market. We've really tried to, at least I have really tried to sort of hone into the sentiment of the market and really just to make sense of it all for people in that pro analysis class. The markets themselves are trying to be rather, or at least pretend to be rather volatile and irrational at this point in time. Okay, market noise is driving this market, but again, the trend is higher and there's nothing to be concerned about as at the close again, even as at today's date, as at the close on Tuesday. All right, so again, be disciplined, but be patient and allow these markets, if this is going to be the support area, right, to make you profit. If you are in the Qs, or if you are in the SPYs, or if you are still holding a bunch of individual long trades on our top 12 individual trade lists, right, to make up those profits as these markets, and when they collectively and decisively actually move legitimately in the trend continuation in the bullish direction. Okay. If you want more information, have a look into that pro analysis class. It is up on the website. Okay, it's a recording there. I think it went for 1 hour and 15 minutes. A lot of analysis in there. Otherwise, send me through an email, success@pivotpoint-trading.com, and I'll be back with you later in the week for some more market updates. Also, by the way, I just wanted to point out that we are still following along, or I'm very closely following, along with the top 12 stocks on my list. And although we're starting to see updates relevant, or at least continuating off from what we spoke about on Saturday, they're still not ready yet. So I just wanted to make that point. When they are giving us definitive signals, I'll flick on over into them. And as I said, when it comes to stalking the trade, right, bringing the trigger down, we'll go through that later in the week. Okay. At the moment, it just needs a little bit more time. Okay. So, again, farewell, everybody. I'll see you later in the week. Enjoy your evening, and I'll talk soon. Goodbye.